Welcome to WCrypto.
Hello, my friends. Welcome back to WCrypto. Today's update follows up on where we left off yesterday. Bitcoin did bottom out slightly lower, dipping into that long liquidation leverage box. Longs got hit hard. Total liquidations came in at $302 million, with nearly $183 million just from the longs. Interestingly, that bottom aligned almost perfectly with the 200 EMA on the 1-hour chart, giving the price some extra support. My long wave strategy printed a green dot, and I even mentioned it in the Discord in real time before the move began. That signal took us from 83,100 up to new highs of around 85,400 in just 16 hours. But then came the economic outlook speech by Jerome Powell, and boom, from 84.5 back down to 83.2. That entire move up was erased in under an hour. You know how it goes. Staircase up, elevator down. Now, despite the flash crash, Powell's comments were kind of mixed. He said crypto is going mainstream, supported a legal framework for it, and hinted at looser banking rules. But all of that lacks detailed confirmation, so don't count on it yet. Fortunately for the bulls, Bitcoin recovered within the hour, quickly reclaiming 84,000 and is slowly climbing again in a mini uptrend. Looking at the 3-day liquidation heat map, bulls are clearly in control right now. The most over-leveraged cluster is forming around 82,950. That means more aggressive longs are piling in than the shorts at the moment. We mentioned 82,000 in yesterday's video already. It is still in play, so stay cautious and do not get shaken out of your positions. Also worth mentioning, yesterday's ETF inflows were not just positive, they were strong. We saw total net inflows of $76.4 million, with BlackRock leading the pack at $38.2 million. That definitely added fuel to the bounce we saw. That is it for today's update. I will keep updating you daily. Join the free Discord for real-time trading thoughts, entries, and exits. Tap the like button if you got any value. Subscribe and click the bell to never miss a move. And see you in the next one.